Hi everybody, Marco Carbajo here from businesscreditbuilders.org. Today's video, we're going to talk about business loans for bad credit. No matter the size of your business, if personal credit is an issue for you and you're thinking about getting funding or you need funding right away for a project, or you've been turned down by your bank or credit union because of personal credit issues, this is the video for you. We're going to share with you step by step a particular way for you to get funding for your business from $25,000 to $2 million. And initially they do a soft pull on your personal credit. But the best part is you can have bad personal credit, 500 minimum FICO scores. Okay, so let's get started first and foremost with what is considered actually bad personal credit. So they got this chart put together for you because, as you know, your FICO credit score is the most widely credit score used in the industry. 90% of lenders use the FICO score. Okay, and there's many different variations of the FICO score, but for lending, this is the score range that's considered bad personal credit in the eyes of banks and credit unions, is if you're under a 669 credit score. So if you fall under 669 or below, then you're considered a bad credit or less than perfect credit. All right, so that's just one of the factors that can trigger a decline when you're trying to get funding as a business. There's other factors as well, especially with traditional banks. They'll look at like your net income at the end of the year after they look at your tax returns, your documentation, your financials. Okay, but if credit scores are one of the things that preventing you from getting qualified for traditional funding, then this video I'm going to share with you is how to overcome that. Okay, now first and foremost, if you don't know what your credit scores are at, I really encourage you to first know your credit scores, know where you stand. So if you go to knowmycredit.org, you can get your 3 bureau report and FICO scores, all 3 FICO scores, for $1 for 7 days. Now there's many other credit providers out there that give you a credit score, but remember that could be your Vantage credit score, it could be an educational credit score. This is your actual FICO score. So that's what's really, really important. So you go to knowmycredit.org. One thing that's really, really cool about this particular service, when you go to that site, they also have a credit score, a FICO score simulator on here. So let's say you want to improve your credit score because you're below a 680. All right, so if you have a utilization issue, you can make some scenarios here of the simulator. If you make some pay downs, what kind of boost will my score get, etc. If I have this item deleted, will my score go up? So that's really cool about the simulator. But that's what I encourage you to do, is make sure first know your credit FICO scores, and actually have your credit reports so you know this and monitor it, because their service is about $32 a month, which is really good to monitor your scores as well as your reports. Now, once you know where your credit scores are at, now what I'm going to talk about is a key question you need to ask yourself if you are in the search of funding. Is first, you want to know how much funding do you actually need, how much money, because that's an important part to determine what type of strategy you're going to put in place to get that funding. So first, set a maximum goal or a minimum goal. Okay, what I mean by that is, let's say you have to buy a certain amount of inventory to fulfill an order. Okay, if the maximum you'd like to have is, let's say, 100,000. I'd love to get 100,000. We'll have some extra cash in the bank. We can set some aside for marketing, but to do our inventory, we need X amount. And let's say the minimum you need, let's say, is 30,000. Okay, or let's say 30,000 will allow us to at least get the inventory we need so we can fulfill all these orders, etc. So you want to have a maximum amount, how much you need, and a minimum amount. Okay, the reason why I say that is, let's say you apply for this loan that we're talking about, and your maximum amount is 100,000, but you only can get, let's say, 70,000. You're 30,000 short. Well, then you can integrate some other strategies, like maybe you can get some revolving business credit cards to help you get some of that capital, or some charge cards, etc. So that's why I'm saying it's important for you to know how much you need. Now, the other thing is what do you need the money for? You need to know how you're going to put this credit or this capital that you get to work. Because it's all about generating more sales or turning a profit, or if you have an investment, what's going to be your return on your investment. That way you know, because it costs money to get capital. The quicker you can pay back that capital, the easier it's going to cost you in interest or fees, etc. So what do you need the money for? How are you going to put that money to work? Now, you may be a business owner that says, you know what, I just want to make sure I have credit available. Well, obviously a business loan is not the solution, because a business loan is a cash injection. You get money in the bank, and then you have a payment every month to pay back that money. So if you're looking to just have capital, you don't need it for something, you just want to have that cushion, then you want credit. You want revolving credit or an unsecured business credit line. That's cash when you need it. Okay, but if you need the cash right now, then a loan may be a good option for you. Okay, so the next question you want to ask yourself is, how long will it take you to pay it back? So if you get a loan for the business, you get an X amount of dollars. Is this something that you're going to see yourself turning around and paying it back right away, like in 3 months or 6 months? Let's say you just need to buy the inventory, the order's already filled, and you know you can pay this back literally within 3 months. That's a short-term loan, right? And that's going to be the least amount because it's a short-term risk for the lender. Whereas let's say you need a longer time to pay this back. You need a year, or you need 5 years, or you need even 10 years to pay this back. Okay, because it's going to take you a long time. That's important. You need to determine that, because if that's your strategy, then you know if this particular loan is going to fulfill your needs and your goals. Okay. The next thing is, how fast do you need the funds? This is a big deal, because you may need the funds 30 days from now or 60 days from now. So you're planning ahead right now. You know you're going to need the money, okay? Or let's say you might need the money right now. You need it today or yesterday, okay? So then obviously you're not going to want to pursue a funding product where it's going to take 30, 60 days. There's funding solutions where you get the money within 1 to 2 days, and that's what you're looking for, okay? So how fast do you need the funds is an important question to ask yourself. Okay, so why a business loan? Well, the first thing, like I said, a business loan is great because you get a cash injection. It's money deposited into your business bank account, and you could use that money for whatever you want. Whereas if you get like a credit card for the business, obviously if you need cash only, we have talked about solutions like plastic, where you can pay contractors using credit cards and cash. That's an option. But let's say you need the cash to make payroll, or you need the cash for a down payment on an investment property for the business, etc. You need cash. So that's where a business loan is very advantageous. And it has a set payment structure. So once you get that cash in the bank, then every month you have a set payment. You know you can budget for it. And the other thing that's really important is interest, because you have a fixed interest rate with a business loan. Whereas if you put all this debt on a credit card, then obviously you know that can change with the market. If you have a variable interest rate on your credit card, and also compound interest can really be damaging to you. That can compound, and that initial money you got that you put on your credit card can actually end up costing you even more and more and more. And that's the dangers of credit cards. That's where maybe a business loan would work great, because you know you have a fixed payment term, you know it'll be paid off by this date, you know how much it's costing you over the term of the loan, and no prepayment penalties depending on what lender you go with, okay? The lenders we're talking about here, there's no prepayment penalties, which is good. So stay tuned for that. And there's tax advantages with the business loan. The interest you pay on a loan can be tax deductible. That's another advantage when it comes to getting a business loan. The other thing is, this preserves shareholder equity. So you're not bringing on investors that are going to have a equity ownership of your company to get the funds you need. So you're preserving your ownership because you're getting unsecured money. The last and final thing is, this helps you build business credit. So getting a personal loan, or using your savings or your own 401k money through a rollover program, that's not helping you build up your business credit. Okay, so this is a way for you to also build up your credit for your business. Now, there's a couple different types of business loans. The first one thing I want to talk about, and we're not going to share with you like how to get this, but this is just so for your information, is there are secured business term loans. And what I mean by that is, that's when you're actually going to the bank and you're securing that loan. You're putting up collateral to offset the risk to the bank. Okay, and they're more likely to give you a business loan when you put up collateral, because if you default on that loan, you can't pay it. Then what happens is they get to use that collateral to pay back the loan. Okay, so that's, let's say you have equity in real estate, you have a equity in your personal home, or you have an investment property that you want to use, and there's equity in there. You can use that as collateral. Now remember, when you put up this collateral on a secured loan, it's a risk for you because you can lose that collateral. Okay, because if you default, then the banks has the right to obtain that collateral you put up. You can put up business equipment as collateral to secure a loan. You have inventory. You may even have outstanding invoices. So If you have invoices out there, that's collateral where people owe you money. You could put that up, and we've heard things of like invoice financing, asset-based lending. So there's many different creative ways for you to raise funding when you have assets or you have collateral. And then there's a blanket lien. I don't recommend doing this. This is when a lender actually could put a blanket lien on your business and give you a loan. But if you default on the loan, they can seize any assets in the business itself to recoup their money. Okay, so that could be very, very risky. Then, of course, there's cash. You've heard of putting a secured loan, putting cash in the bank, or using a CD, or using stocks, investments to secure a loan. So that's a secured loan. But this video, we're going to talk about how you can get an unsecured loan. Okay, not a secured one. So if you don't have any of these assets or collateral, or you don't want to put any of these collateral at risk, I want an unsecured loan, then we're going to share with you how to do that if you have bad personal credit. Okay, so other thing on types of business loans, there's fixed rate business loans and there's variable interest rates. You want to stick with the fixed rate because variable, they can fluctuate. And as you know, with the way the markets are, the rates are going up and it can really cost you a lot of money. So that's why I would recommend getting a fixed rate business loan. And there's different types of time frame loans. There's short term, 6 to 12 month loans out there. There's intermediate, 1 to 5 year repayment, and long term, 6 to 10 years. Now, in the source we're going to give you today in this video, we're going to share with you how you can get all three of those, whether you want a short-term loan or up to a 10-year repayment loan on a business loan, even if you have bad personal credit, okay? So, but those are the different terms you can get on loans. Now, why not use a traditional bank? Okay, you're watching this video because it says business loans for bad credit. So, for you, getting a traditional loan from a bank, you're like, I can't because my credit's bad. Or let's say your credit score is 600, 650, and your bank will decline you just because of your credit score. So that could be one of the issues why you can't get a traditional bank loan. Getting a traditional bank loan, you're obviously going to get the best interest rates. So if your goal is to get the best interest rates possible, but you have bad personal credit, remember that's not going to happen. That's why you're more riskier because you have bad personal credit. Okay? Or you may have great personal credit, but the lending criteria your company doesn't meet. Let's say you have lots of deductions with your business, and at the end of the year, you have literally your business at a loss. It has no net profits, or it's very little net profits. Then in the bank size is if your net, that's after all your expenses, this is your net profits. If it's not large enough, how do you, they're in their eyes is, how can your business repay on a loan or on a line of credit if it's not profitable enough or it has no profits? And that's the biggest confusion most business owners get is they have all this revenue coming in, but if you don't have net profits, then with traditional banks, they don't see that net profit, then there's no way for you to repay on that loan or that line of credit. And that's why a lot of small business owners get turned down. Okay, so that's why traditional banks have strict credit and lending criteria. Remember, banks, especially the big banks, they like big businesses. Big banks, big business. So that's why if you're trying to go the traditional route, I love credit unions. That's a great community banks. They're much more flexible, but still they're going to look at those same data points. Okay, so that's why a traditional bank may not be for you at this time. Also, they have lengthy, time-consuming application process. Like I said, if you know those questions earlier, let's say you need funding right away. You need funding this week or next week. You can't wait 30 days. You can't wait 60 days. Then obviously your traditional bank will not be the option you want. And remember, there's all these slots you need to fill into to even get a traditional bank loan. Excessive documentation. This is a big thing that turns many small businesses away, even medium-sized businesses away when they have to provide all these financials because that's what they're going to want. They're going to want your financials. They're going to want your 2 years business and sometimes even 2 years personal tax returns. They're going to want your P&L statements, your debt schedules, because they want to do a full review on your business. So there's there's a real rigorous underwriting process, even if you've been doing banking with them for quite some time. Okay, but my recommendation to you is if you do want to go the traditional route, make sure your credit scores are at least 680 or higher, you're in business for at least 2 years, and you're willing to support all this documentation. Okay, but like again, this video is for those of you who have bad personal credit or you can't meet these other criteria. And it takes a long time to fund when it comes to dealing with traditional banks. Okay, so that's why I love alternative lenders. Okay, alternative lenders out there are filling the gap that traditional banks and credit unions are not able to fill. That's why you see a lot of the bigger banks teaming up with some of these alternative lenders, fintech companies, because they can't keep up with the technology that a lot of these online lenders are doing, alternative lenders. So banks are teaming up with them, okay, because they're allowed to fill that need. Okay, so that's why I love alternative lenders. So this chart here kind of gives you an idea of what the trade-off's going to be for you as a business owner. Okay, so you have revenues coming in as a business, you're doing well, but you have bad personal credit or you can't meet the criteria that the banks want. So if you're dealing with a traditional bank, you know you're going to get a low APR, but if you're going to deal with alternative lender, they're going to overlook a lot of the things that traditional banks would decline you for, but you're going to pay higher interest, okay? That's just a fact. So like for example, your bank's not going to give you a loan for your business because let's say your credit score is 550 or 600, but this alternative lender will, but they're not going to give you the same rate that the traditional bank will. So remember that. Time to fund, that's huge. Banks will take a lot longer, 30, 60, sometimes even longer than that. Okay, where alternative lenders, in 1 to 3 days, you can have that money deposited right into your business checking account. Now, application criteria, this is another thing, is if there's a full docs, remember, with banks, like credit unions, traditional banks, they're going to want docs. They're going to want your financials, tax returns. Alternative lenders, sometimes it's just an online application, and they want to see your 3 months of bank statements, and that's it. And some alternative lenders, they'll just do it digitally. So you don't have to submit any paperwork. It's all done online. So that's why it's loose. It's so easy. And that's why a lot of small and medium-sized businesses love alternative lenders because it's fast and it's easy. Okay, the revenue requirement with traditional banks, they want you doing at least $250K a year in revenue. Okay, so if you're not meeting that revenue requirement, they won't even look at your business. Okay, so that's what I love about alternative lenders, because some of the lowest, the one we're going to share with you today, the source, their lowest requirement is $5,000 a month in revenue. That's $60,000 a year in revenue. That's it. And you can get a loan or even a line of credit. So that's huge. And you can have 500 credit score. So that's another thing to look at with traditional banks. They want you to have great credit. Alternative lenders, they know you're coming to them and they're filling that hole. 500 or less, or 500 or more credit score is the minimum requirement. Now, they both offer business term loans and business lines of credit, so that's great. But hopefully this chart kind of gives you an idea of so you can make an assessment of where do I fit in? What do I like? What do I don't like? What do I need to do to move into the traditional space? If you're going alternative right now, or if you're trying to get a traditional and you can't, this is a solution for you, okay? So this particular source is called Rock Financial. You can go to bankbusinessline.com. That'll take you right to their particular form page. And basically what that is, and I'll show you right here, this is the form. You can see our logo on here. We've been working with them. They do great work. They provide lots of funding for a lot of our clients. So this is one of our partners that we have. So it's a very simple application to go here. Now, keep in mind, let me break down what they actually look for. Minimum, do not apply here unless you're at least 6 months in business. So think about that. You don't have to be 2 years in business, only 6 months in business. Now, the next key thing is you have to at least be doing $5,000 a month in gross revenue for the business. Not $3,000, not $2,000. Let's say the past 3 months, you've done $5,000, $2,000, $3,000. No, it has to be $5,000 a month or more every single month consistently, because they're going to look at 3 to 6 months of bank statements. So you've got to be doing over $5,000 a month consistently. Okay, so that's the requirement. If not, they're going to turn you down. Okay, now minimum 500 plus credit score, and they do a soft pull on Experian. Okay, so like I said, you should know where your credit scores are at. You should look at your credit reports, monitor them with knowmycredit.org. They will do a soft pull on Experian, and what happens now is they do an analysis. Okay, and then they obviously present to you offers of loan if you qualify for a loan or a line of credit, and you may get 2 or 3 offers. You can only accept 1 offer. Okay, but that gives you the opportunity to make a decision and get funding right away. That's what's really, really awesome about Rock Financial. They're fast and they get it done. Okay, so bankbusinessline.com, you can go there. Now let me kind of give you a quick overview of their business term loans. They do $25,000 to $2 million in funding. Okay, so that's quite a bit. That's a large amount of capital that's available for you as a business. Okay, 6 months to 10-year repayment terms on these loans. All right, no prepayment penalty, which is great. No, and they have monthly payments, and the rates start as low as 7.99%. And this is unsecured funding, by the way. All right, and they can fund you in 1 to 3 days, which is huge. That's fast funding deposited into your business bank account. Now, also, it's important for you to realize they have other funding solutions. So they have unsecured capital, they have business lines of credit, SBA loans, accounts receivable finance, equipment financing, asset-based loans, and merchant cash advance. So business loans are just one of the funding products they have, but that's the beauty of when you submit your information, you give them the bank statements, they do an analysis on your business. So you may not, let's say they can't present you a loan that's large enough. Let's say the offer you get for a loan is X amount, but you get a business line of credit offer that's better. Okay, so that's where it's an advantage for you to for them to do that assessment. Okay, so the next thing I want to share with you is our funding solutions, because although Rock Financial has a lot of great funding solutions, we also do our own done-for-you funding. We have business credit card funding, which is one of our most popular funding products. So let's say you don't need a loan, but you want like credit cards to help you build business credit for the business. If you meet that credit score, we can do an analysis for you. If you go to businesscreditbuilders.org, we also have our do-it-yourself business credit building system. So if you're more hands-on, you want to build up your business credit, you want to get vendors, gas cards, charge cards, etc. We have a platform there on businesscreditbuilders.org. So if you found this video helpful, please give us a thumbs up. Make sure you subscribe to our YouTube channel. That way you're always getting notified when we come out with a new video, a new funding product or funding source. With that, make it a great day, and we'll talk to you real soon.